Hey, what's up, traders? Brian Horton with BK Trading Academy, also known as BK Stocks Academy. We're going to look at the S&P 500 ETF, which is called SPY. I'm going to break this down for you very simple, a brief analysis that's going to explain why it's time to sell this. I'm going to look at some past time data using price action analysis that is going to really blow your mind. So stay tuned. Let's go ahead and deep dive into it. All right, guys, so I have everything for you right here already marked up. I'm just going to save you some time. So you want to start on a higher time frame so you can determine which trend you're in, because if you are trading with the trend, it's going to save you a lot of heartache, a lot of money, and the risk is completely minimal. So if you're trading in an uptrend, you want to buy down here support, price will go up, and you are in profit. Now, this is considered a counter trend trade, so it's a little bit more riskier. However, this is considered a B swing strategy. So for those who've been following us for a while should know how B swing works, but I'm going to break it down for you just a little bit so that it makes sense. And then we're going to use fundamental analysis to make sure that this makes sense for you as well. So SPY is the ETF for the S&P 500. For those who are new, the S&P 500 represents the top 500 companies in the country. So we're talking about Microsoft, we're talking about Apple, we're talking about Chipotle, we're talking about the big companies that a lot of people invest in. And not just invest in, we're talking about consumers. So you as a consumer, I'm sure you have an Apple, you have a Microsoft product, you eat at Chipotle, you eat at some of the big companies, you use Nike, just a lot of big companies. So it makes sense for price to be rising, especially during December, even November, like Black Friday, Thanksgiving, even October. So from October up to December is when you see an incline in price, just like you see here. Now, what happens after December when everybody went shopping, everybody spent their money, price starts to drop. So I want you to remember that, because we're going to understand why I think the way I think when I'm looking at charts. Here's my resistance zone. Why is this my resistance zone? Because if I look in the past, back in December 2021, price resisted or rejected off of this zone before. How much did it reject off of? I'm going to get my measuring tool from this top here all the way down to where it stopped. Over 27%, 27.54% to be exact. A significant drop, guys. I can't express to you how significant that is. That's from $480 all the way down to $348. Very significant. So if you had a few shares, you would have made a nice chunk of change. Now, I'm on the monthly chart, so each candle represents a month. So it would have taken some time, but if you're a position trader, that's nothing for you. Now, I have something specifically for those who are intraday traders and swing traders and even position traders, what's going to happen soon. Now, I'm going to express to you what I believe is going to happen. So first, we identified we're in an uptrend, and I have a trend line to show you that. So I start from the low, and typically you want to connect to the next higher low and connect it straight up like this. Now, that's good. However, you can see how price dropped and broke our trend line. So that trend line is no longer valid, which means we have to recreate and reconstruct our trend line. So instead of just recreating and reconstructing our trend line, starting from here and doing something like this, why not just connect it from the bottom? So you can do either or. I can connect it from here and just do this, and this will be my trend line, or I can just start it from here where we started our uptrend from this point on. All right, so this is the monthly time frame. Let's drill down to the weekly time frame to get a clear picture of this here. So this is that same trend line if I did something like that, right? So either way, we're in an uptrend. We identified that. So now that we have that, I'm going to trap my price into a channel and do this here. And I'm going to connect my highest high here, right here, close to this one here. I didn't connect this here because I'm going to connect the highest peak where it broke down my support resistance, now created my new support resistance. So this is where I'm focused on, all within this area right here. That's where I'm focused on, okay? Now that I understand that I have a channel, typically in the price action channel strategy, which is another strategy that we use with our students all the time, is that you want to sell at resistance, you want to buy at support or horizontal line. Once you figure out your channel resistance, your channel support, now you want to find a horizontal resistance and a horizontal support. So I have my horizontal resistance here by looking in the past, finding where price rejected, and guess what? Price is near there again, where I believe price is going to reject. Why do I believe that? Because one, it's December 2023. Today, it's still December. It's headed into January. I don't think it's a coincidence that price dropped over 27% 2 years ago, also in December, where people aren't buying anymore, where they're not buying as much anymore. So, not only that, you want to look at the anatomy of the candle. So, let's look at the weekly candlestick here. Let's look at the last three candlesticks to be exact. Let's delete this here. This candlestick was pretty wide here. Look how big that candlestick is. And if I get my measuring tool, if I measure it from the bottom to the top wick, that's 14.7% long. Then let's grab the middle one here from the bottom wick to the top wick. That's 8.3% long. And let's get this last one here from the bottom wick to the top. It's about 3.83% long. So what I'm anticipating is for price to maybe push up just a little bit higher, maybe into my resistance zone around $478, probably no higher than $481, where price is going to reject and start moving pretty abruptly to the downside. I'm not talking about a pip here, a pip there, or a tick here, a tick there. I'm talking about pretty abruptly. Now, we're on the weekly time frame, so it's going to take some time. But for those who are position traders, this is nothing, especially if you're getting it at the best possible price. If you're an intraday trader, you want to drill down to the lower time frame and start looking at the anatomy of the candlestick. So now that I'm on a higher time frame, I'm looking at the anatomy of these last three candlesticks. I'm going to see if it's going to push higher or not so I can sell. And if so, you'll be in the money. Now, I use two things to determine if I'm going to sell. One is at the top of my trend line. Two is at a resistance zone, looking at price action in the back. And three, let's take a look at an indicator. Let's take a look at the Bollinger Band. My Bollinger Band is piercing through my resistance red Bollinger Band, which is an indication that price is overbought and it's time to sell soon. Let's look at it back in December 2021. Price was piercing through the Bollinger Band, and then price started to reverse. Now, this is going to take patience if you're a swing trader or a position trader. It's not going to happen overnight. Price may even go against you a bit, but you have to trust the process. But one thing I would say is risk no more than 2% of your account. This is what we tell our students all the time. Your risk tolerance may be higher. And then two, this is a counter trend trade, so it may fake you out a bit and go higher, where it's going to get you out and then drop. So you have to be patient and you have to have your risk management on point. Let's look at another confluence here. Let's take a look at the RSI, for example, another favorite indicator of mine, the relative strength index. If I throw in my RSI here, you can see that where price is at is close to the 70% mark here, or the 70 mark here. Just like before, when I look here, where price was right above 70, it came here right off our channel and dropped to the downside pretty abruptly. And if you stayed to the bottom of the channel, you made some nice chunk of change. We're approaching it now soon. It's not quite at the 70, but it's near, and it could drop and continue to drop at that point. But you typically want to get in when price starts to cross this yellow line. Now, your colors may be different. Mine is purple and yellow for the RSI. But whenever the top band crosses the second band, it's pretty safe to start selling, okay? Or sometimes people will sell when it gets to 70 or higher, where it's almost at now. So 3 things or 4 things that I've used for confluence to indicate that price is ready to sell. I've looked at price action. I've determined, I understand what I'm trading, which is the top 500 companies in the world where a lot of consumers are buying. And I know it's December where a lot of people aren't buying anymore, or almost January 2024. So it just makes sense. Now, 5, we're going to look at fundamentals. Now, obviously, I don't know what's going to happen fundamentally. Fundamentally simply means news, high impact news. Now, we have still the conflict of Ukraine and Russia, which kind of died down a bit, or you don't really hear it as much, but it's still very much alive. That can influence the Fortune 500 because the United States is heavily involved with Ukraine and this Russia-Ukraine crisis. Also, Israel and Hamas in Palestine. The United States is heavily involved in that. So if you understand the Fortune 500, you know that the Fortune 500 is the heartbeat of America. You have the top 500 companies. So whenever you have Microsoft excel, Apple excel, and all of those 500 companies excel, that means America is excelling. If those aren't excelling, that means America is falling. So, that being said, guys, we know that these companies are going to start to pull back because it's almost January and we know it's going to drop. And January is just a day or two from now. So, keep an eye out on these levels. You want to make sure that you keep an eye out on the conflicts around the world, which could escalate and push this price even higher. So you don't want to just buy or sell just because it's ripe. You want to keep an eye out on news. You want to check your news. I like looking at finviz.com to determine what's going to happen around the world. I like to even keep my eye on Bloomberg, where I'm going to figure out what's happening around the world and even locally. So guys, let me know in the comments if this made absolute complete sense. I didn't even have to use the indicators. I just simply look at price action and then a bit of common sense to determine what could happen. But then just looking at the indicators just for confluence, just to tell me what I already know. So guys, again, don't just jump in. You want to be sure you look at the anatomy of the candle. You want to have a risk management plan in place because it could very well do the opposite. But this is considered a B swing strategy that we use all the time with our academy. This is also a price action strategy that we use, and this should be golden. Let's keep an eye out on it. Let me know in the comments if this made sense. Don't forget to subscribe, like it, and then also join our Discord below in the description if you haven't already. And I will see you in the next video. God bless you.